So this guy, a dancer, makes millions in the stock market. Sounds pretty crazy, right?
Like out of nowhere.
Well, today we're going to deep dive into Nicholas Darvis.
Right.
His book, How I Made $2 Million in the Stock Market. That's what we'll be looking at today.
Cool.
To see how he went from, he knew nothing about the market, to making millions.
Right. Complete novice. Right.
Yeah. And what's really interesting, he was a dancer traveling all over the world.
Oh, wow.
And he's sending orders, buy and sell orders, by cable.
No way.
From places like Hong Kong, Tokyo, all over.
Wow.
But before we get into all that, we need to go back to the beginning.
Okay.
To what he calls his Canadian period.
Mm-hmm.
This back in 1952.
Okay.
He gets paid for a performance,
Mm-hmm.
but instead of getting paid in cash, he gets 6,000 shares of this Canadian mining stock, Brilliant.
Interesting.
And this is during, a massive bull market.
Right. So, everything's going up.
Yeah, everything's going up.
Every stock.
So this Brilliant stock just takes off. And he ends up selling it for, almost an $8,000 profit.
So he made, what, almost $7,000?
Yeah, something like that.
Yeah.
Not bad for your first, time investing in the stock market.
Yeah, that's a pretty nice little win, yeah.
Yeah, I can see why he kind of got hooked after that.
For sure, yeah. But, it was really more luck than anything, right?
Right, just being in the right place at the right time.
Exactly. Think about it. He was getting stock tips from, waiters.
What?
Yeah, and people he met in nightclubs. Can you imagine?
I guess everybody's got an opinion.
Right. But that's not exactly a solid investing strategy, is it?
Not really, no.
Yeah.
So, of course, he learned some lessons along the way.
Oh, yeah, some expensive ones.
In his book, he talks about this one time. He buys 10,000 shares of this company called Kran Mines.
Okay.
At 10 cents a share.
Yeah.
The next day, it goes up to 11 cents a share, so he sells, thinking he's made a quick $100.
That's smart.
But then he realizes, after the commissions and taxes, he actually lost money on the trade. That's an important lesson, right?
Huge. A lot of new investors don't even think about that stuff.
Yeah, it's like those hidden costs can really sneak up on you.
They do.
So he realizes these random tips aren't going to cut it.
Yep.
He needs a better way to figure this market out, right?
Right.
So he decides, okay, I'm going to Wall Street.
Makes sense.
That's where the real information is, right?
At the heart of it all, yeah.
Yeah. So he gets himself a Wall Street broker.
Oh, okay.
Thinking, this is going to solve all his problems.
Sure.
Now I'm going to have the inside scoop. I'm going to be making all the right moves.
Yeah.
And here's where it gets interesting.
What happened?
Even with a broker, he's still making the same mistakes.
Really?
He's still chasing rumors, jumping in and out of stocks way too quickly.
I see.
And he even admits this.
Oh, wow.
He says, I was letting these small gains blind me to the bigger picture.
Yeah, that'll get you every time.
And it cost him. He gives this example of Kaiser Aluminum.
Mm.
He buys 100 shares, right? It goes up, he sells, makes a profit.
Right.
But then it goes up even higher.
Oh.
So he buys back in.
That's a mistake.
Then it dips down a little bit. He panics. He sells at a loss.
Oh, man.
It goes back up. He buys in again.
He can't help himself.
Sells again at a slightly higher price.
Oh, my goodness.
But still at a loss because of the commissions, right?
Wow.
So even though Kaiser Aluminum was generally going up,
Yeah.
he ended up losing money on it because he couldn't just hold on.
It's like he was fighting the trend the whole time.
Exactly.
That's got to be frustrating.
Oh, yeah. And this leads us to, his biggest wake-up call.
Oh, what's that?
A company called Jones and Laughlin Steel.
Okay.
This time he decides, all right, I'm going to do my homework.
He's going to do some research.
Yeah. So he starts looking at the fundamentals.
Okay.
The company's financials, the industry trends.
Right.
And everything is pointing to Jones and Laughlin being a really good investment.
Oh.
A sure thing.
He must have been feeling pretty confident.
Oh, he was so sure.
Wow.
He even mortgaged his property and borrowed money to invest in this stock.
He went all in.
Big time. So what do you think happened?
I have a feeling this isn't going to end well.
Well, as soon as he buys in, the stock starts plummeting.
Oh, no. Talk about a nightmare.
Yeah, and remember, he's leveraged, big time.
Right, so every tick down is magnified.
Exactly.
Yeah.
And as the stock keeps falling,
Yeah.
he's staring bankruptcy in the face.
Wow.
He ends up selling, of course.
Yeah.
At a huge loss.
Yeah, and that's got to hurt.
Oh, yeah. And this experience with Jones and Laughlin, it was a turning point for him.
I bet, yeah.
It forces him to realize
Yeah.
that, just looking at fundamentals, that's not enough.
Right. You got to understand how the market itself is moving.
Exactly. And this leads him to develop what he calls his box theory.
Okay, this is where it gets interesting.
Yeah. So basically, the box theory, it shifts his focus from like analyzing balance sheets and earnings reports to looking at the price action itself.
Okay.
Like how the stock is actually moving.
Got it.
So he starts tracking these individual stocks, right?
Right.
And he notices they tend to move within these defined price ranges.
Okay.
He calls them boxes.
So the stock is kind of bouncing around between a high and a low.
Exactly. And he's looking for what happens when the stock breaks out of that box.
Like it's either going to go up or down, right?
Exactly.
Yeah.
That's the signal.
Okay.
If it breaks out above the top of the box,
That's a buy signal?
it's a buy signal.
Okay.
If it breaks out below the bottom of the box,
Sell.
that's a sell signal.
Got it.
But there's another key element here.
What's that?
Volume.
Ah, okay.
He notices that these breakouts, they're often preceded by an increase in trading volume.
Interesting.
It's like the market's getting ready to make a big move.
Oh, I see.
So the volume becomes like a confirmation signal.
So it's not just about the price, it's about how many people are trading it.
Exactly.
Oh.
It's like the more people are trading it, the more likely it is to break out.
Okay, that makes sense.
He gives this example in his book
Okay.
of a stock called M&M Woodworking.
Right.
He's watching it, and he sees it forming these higher and higher boxes
Okay.
with increasing volume on each breakout.
So it's like gaining momentum.
Exactly. And that tells him this stock is strong, it's probably going to keep going up.
Oh, that's cool.
So he buys in, rides the wave, makes a profit.
Nice.
And what makes this even more amazing
Yeah.
is that he's doing all this while traveling the world as a dancer.
Wait, what?
Yeah, like he's not sitting in front of a computer screen.
Right.
He's getting these stock quotes like by cable.
No way.
Yeah, like he's in Hong Kong.
Wow.
Sends a cable to his broker in New York. What's the price of this stock? What's the price of that stock?
That's why.
And this distance from Wall Street, it actually turns out to be a huge advantage.
Wait, how so?
Because he's not bombarded with all the rumors and the news
Oh, I see.
and the emotional swings of the market.
It's like he's in his own little bubble.
Exactly. It forces him to focus on his system, on what the price action is telling him.
Right. No distraction.
He even compares it to a poker game where you can see the cards.
The price action.
Yeah, but you can't hear the other players betting.
The rumors and all that.
Exactly. So he's got this like incredible level of objectivity
Oh, wow.
that a lot of investors, they just don't have.
It's hard to stay objective when you're in the thick of it.
Exactly. So he's definitely a technician at heart,
Right, using the chart?
but he doesn't completely abandon fundamentals.
Okay.
He calls himself a techno-fundamentalist.
So he's combining both.
Yeah, he's looking at industry
Yeah.
trends,
Mhm.
growth potential,
Right.
but the price action, that's his primary focus.
So it's like he's got to see the market confirming the fundamental.
Exactly. And this leads to one of his first big wins with this system.
Oh, yeah. What's
Yeah.
that?
Lorillard, the tobacco company.
Okay.
He sees the chart pattern. He likes what he sees.
Uh-huh.
He also sees that the tobacco industry is growing.
Right.
So he decides, okay, I'm going to buy some Lorillard.
Right.
But he doesn't just go all in.
Okay.
He starts with what he calls a pilot buy.
A pilot buy. What's that?
It's like a small initial investment
Oh, okay.
to test the waters, see how the stock reacts.
So he's not risking too much at first.
Exactly.
Ah.
And as the stock price moves in the direction he expects,
Confirming his analysis.
yeah, he starts adding to his position.
Gradually increasing his investment.
Exactly. And this is key, right?
Yeah.
He's managing his risk.
Smart.
He's not just throwing all his money in at once.
Right. He's letting the market tell him what to do.
Exactly.
Yeah.
And there's another important part of his strategy here.
Okay, what's that?
Stop loss orders.
Yeah.
These are predetermined sell points
Okay.
that if the stock drops to a certain price,
Uh-huh.
it automatically sells.
To protect him from big losses.
Exactly. And it's interesting. He actually gets stopped out of Lorillard early on.
Oh, really?
Yeah. But then the stock quickly rebounds.
Oh, wow.
He buys back in.
So the stop loss saved him.
In a way, yeah. It forced him to take a small loss.
Yeah.
But then he was able to get back in and ride the stock higher.
Interesting.
So Lorillard keeps going up and up and up.
Whoa.
And it would have been really tempting to sell, right?
Oh, yeah.
Lock in those profits.
Take the money and run.
But he doesn't. He's patient. He sticks to his system.
Disciplined.
And it pays off big time.
I bet, yeah.
Lorillard eventually hits its peak.
Uh-huh.
He sells. makes a huge profit.
Nice.
This trade was a major confidence booster for him.
It must have validated everything he was doing.
Oh, yeah. He's like, okay, this system actually works.
Powerful stuff.
And while he's riding high on this laurel-lard success,
Yeah.
he spots another opportunity.
Oh, what's that?
Diners Club.
The credit card company.
Yep. And this is like the very beginning of the credit card era.
Oh, wow. So he's really early on this.
Yeah, and he sees the potential.
The whole new industry.
Exactly. So he applies the same principles.
Pilot buy, scaling in.
Yep, buying in stages as Diners Club starts moving in the right direction.
Smart.
His profits are really starting to grow now.
He's on a roll.
Yeah. He finds another winner, Universal Controls.
Okay.
Applies the same strategy, pilot buy, scaling in, trailing stop loss.
It's all coming together.
Exactly. He's got the system down.
And it's working.
Yeah, he's making a lot of money.
This must have been an incredible time for him.
Oh, yeah. But success in the market, it can be a double-edged sword.
How so?
It can lead to overconfidence.
Ah.
And overconfidence can lead to mistakes.
Yeah, that makes sense.
And this brings us to another turning point in his journey.
Okay.
His decision to return to New York.
Oh, so he's going back to the Lion's Den.
Exactly. He's going back to Wall Street.
Back to where it all started.
Yeah. And now he's like $500,000 richer. Thinking, I've got this market figured out.
Dangerous thinking, right?
Oh, yeah. Overconfidence can get you in trouble.
It can.
So he gets back to Wall Street.
Yeah.
And, those old habits, they start creeping back in.
Really?
He starts going to brokerage offices again.
Oh, no.
Listening to all the chatter.
Rumors, the tips.
Exactly. And it's like he forgot all the lessons he learned.
About tuning out the noise.
Yeah. He starts making impulsive trades again.
Oh, no.
Based on gut feelings, tips he hears.
Chasing those quick gains.
Exactly. And it costs him.
Of course.
He talks about this one stock in his book,
Yeah.
Brunswick Bulk Colander.
Okay.
He loses a bunch of money on that one.
Man, that's got to be tough.
Oh, yeah. It was a reminder.
A painful one.
Yeah, that no matter how much you make,
Yeah.
you got to stay disciplined.
Absolutely.
You got to keep your emotions in check.
Otherwise, the market will eat you alive.
Exactly. So he realizes he's going off track.
Okay.
And he knows what he needs to do.
What's that?
He needs to get away from Wall Street.
Get out of there.
Yeah. So he books a flight to Paris.
Wow.
Puts an ocean between him and Wall Street.
Smart move.
But before he leaves,
Yeah.
he gives his brokers very specific instructions.
Like what?
Don't call me.
What?
Don't give me any news. Don't give me any tips.
Wow, he's serious.
Just send me the daily stock quotes. That's all I want.
So, back to basics.
Yeah, it's just the data, the price action.
You needed to shut out all that noise.
Exactly. It's like a digital detox, but for the stock market.
I love that analogy.
So he's in Paris.
Yeah.
He's getting his daily cable
Uh-huh.
with the stock quotes.
Okay.
And slowly, he starts to regain that clarity.
He's back in his zone.
Yeah. He starts seeing those boxes again.
The patterns.
The patterns.
Okay.
His confidence comes back.
That's great.
And he starts trading again.
All right.
But this time,
Yeah.
he's even more disciplined.
Oh, how so?
He's like, I'm never setting foot in a brokerage office again.
Wow.
He spreads his trades across multiple brokers.
To minimize their influence.
Exactly. He's not going to let anyone sway him.
Smart.
And he develops this really strict routine.
Oh, like what?
He's basically working while Wall Street sleeps.
Because of the time difference?
Yeah, he's making his decisions in the calm, quiet hours.
No distraction.
No distractions.
I love it.
And it pays off.
Yeah.
He finds two really great stocks.
Okay.
Texas Instruments and Thiokol Chemical.
Wow, those are big names.
Oh, yeah. And he applies his system.
The boxes, the volume.
Yep. The pilot buys.
Yeah.
The scaling in. The trailing stop losses.
He's sticking to his plan.
Exactly.
Mm.
And these trades, they're huge.
How huge.
He's trading millions of dollars now.
Wow.
And he reaches his goal.
$2 million.
He surpasses it. He ends up making over $2.25 million.
That's incredible.
But what's really interesting is
Yeah.
his reaction.
What was it?
He doesn't celebrate.
Really?
He's not like ecstatic or anything.
No.
He describes it as this feeling of calm satisfaction.
Like inner peace.
Yeah, like he had finally mastered himself and the market.
That's powerful.
He learned to control his emotions, to trust his system.
And it led him to incredible success.
Exactly. So his journey, it wasn't just about making money.
Right.
It was about self-discovery.
Overcoming his own limitations.
Yeah. It was about finding that balance.
Between intuition and discipline.
Exactly. His story reminds us that anyone can learn to trade.
Yeah.
But it takes discipline, patience, Emotional control.
Risk management.
Risk management.
And having a system.
And a system that you trust.
Absolutely. You can't just wing it in the market.
No, you need a plan.
And you gotta stick to it.
Even when things get tough. Darvis, he also showed us the power of detachment.
Right, getting away from the noise.
Yeah, finding that space where you can think clearly.
Make rational decisions.
Exactly. So here's a question for you.
Okay.
How can you apply this principle of detachment in your own life?
Interesting question.
How can you create your own cables around the world?
Tune out the distractions.
Yeah, find that quiet space.
Where you can make decisions that are aligned with your goals.
Exactly. Nicholas Darvis, the dancer who became a Wall Street legend.
It's an incredible story.
His journey is an inspiration to us all. It reminds us that we all have the potential to achieve great things.
If we're willing to put in the work and learn from our mistakes.
Absolutely. Thanks for joining us for this deep dive.
It's been a pleasure.